And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. We got a full crew like we have been lately. We've got Mark and Noah and Cody and Matt and myself here, Tim, the coaches from Tackle Trading. Let's start with Matt. Matt, how you doing today?
I am doing fantastic. I'm excited to be here with the team, and but I'm not doing as well as the market. S&P up about 200 points on the day so far. Obviously, that comes into account the overnight action as well. Dow Jones up 1,500 points. Market's kind of celebrating right now the hope of a massive fiscal stimulus package that I believe Mitch McConnell said was on the 5-yard line, or was that Pelosi?
Oh, I heard that from Pelosi as well. They might have both said it.
Schumer said we're on the 2-yard line.
Oh, we're almost getting into touchdown.
You know what this sounds like? This sounds like an argument from our scouting
1 minute abs. 2 minute abs.
No, we're on the 5-yard line.
Just
remember
have that
what
happened
about energy.
Just remember what happened to Seattle when they were on the 2-yard line to win the Super Bowl, you know?
Oh,
yeah.
Nothing.
Is there also going to be a video review?
Oh, shot fired at Pete Carroll.
Shots fired. Shots fired.
Oh, goodness. Here's the big question for the day. Is this the start of something more, or is this just a short-term relief rally off of the bottoms and technically oversold? Mark, I know that's where your head is. You're trying to map out that thesis. Let's start with the technicals here, not the news. We are bouncing back into the falling 9, Mark. That is one of the most important technical indicators you've ever used yourself personally. Does it matter to you here?
No. Once again, unless someone can show me in this environment, daily and technical levels have not mattered for 5 weeks, why would they start mattering today? Mm-hmm. Now, they gain significance if they actually do matter. But like right now, like normally in this situation, if you had normal conditions, a rally up to the 9, and I would be more of a 2, 3, 4 day rally, you know, classic slow bear rally that happens over 2, 3, 4 days. That would be much different. But a 1-day shoot up, getting in the way of sentiment right now is really, it is. The sentiment right now in this market is one of the toughest sentiment markets I've ever had to figure out. Does this sustain and have a 2, 3, 4 day rally up to 2650, up to 2700, up to 2750 before you start seeing people, you know, seeing those bearish reversal signals? That's a hard guess right now. That's a hard guess right now. Like I wish I had something more definitive to say on that. But like this is, I mean, it's right now, I mean, action is like a freight train, like both up and down every day for 5 weeks, which is why day trading, day traders to the upside today, not doing too bad, right? Not doing too bad. Whether it's sustainable or not, it is really hard. You know, Matt, and that's from just a short-term analysis.
Sure.
You know?
Yeah. Day by day, the volatility is obviously off the charts, and the news is really, we're trying to wrap our head around what it means. Matt, I'm going to ask you the same question. Here we have a 1-day rally, technically coming back into a falling 9-period moving average. Do technicals matter to you here as much as they would in other markets? Do they matter at all? What's your read on this situation? We've got this big bounce going on Wall Street today.
No, I'm not prepared to call a market bottom simply because we have one up day. I think that lacks understanding of the history of the market to a certain extent. When you're looking at some of the biggest up days that we will ever see in markets, they usually happen in prolonged bearish downtrends. And so, you know, you come back here to kind of the October, September market crisis. Right here on October 13th of 2008, you had that huge 1-day rally, just a massive rally coming off the lows, off a very extended downtrend here. We're talking about 30% downward movement in price in literally like 2.5, 3 weeks, right? Fairly similar to what we're going through right now, down about 30% off the highs so far year to date. That has happened over the course of the last 4 or 5 weeks. So you're looking at something fairly similar happening from an economic perspective in the 08 market versus what you saw in the 2020 market. And here's that one update, 10% upward movement of price. Everybody's celebrating the fiscal stimulus. They're going to come together. And yet over the course of the next few months, you saw 30% more downward movement in price. So some of those days that just give, you know, the long-term investors a little bit of false hope, in my opinion, is on days like today where You see these major actions coming out of the United States Congress. Obviously, we've discussed what the Fed did yesterday. $2.5 trillion in stimulus, guys. It was just 5 days ago. We were talking about that at $1 trillion. And then it was 1.5 trillion. Then it was 1.8 trillion. Then it was 2 trillion. And now we're all the way up to 2.5 trillion. What that final bill looks like, it's going to be fascinating to kind of comb through. And we'll go through some of the proposals here in just a moment. But on days like today, after you've seen a 30% drop in price, you're going to see these moments in time the same way you saw them in 08, the same way you saw them in 2001, and quite frankly, the same way you saw it just a month ago when at the beginning of March, we had that upward movement in price, and then it just got absolutely obliterated back down. Nothing in that fiscal stimulus package will lead me to be ready to call a market bottom. Not on a day, and I get it, I'm not trying to throw cold water on 10% upward movements in price, but guys, the PMI numbers that came out today in Europe were atrocious, just absolutely atrocious across the board, out of the UK, out of the Eurozone, just absolutely abysmal PMI numbers. And we're just starting to see the economic reality. We saw it a couple of weeks ago with PMI numbers coming out of China. Their worst PMI numbers since they started reporting 20 years ago. These PMI numbers today out of Europe are some of the worst PMI numbers that they've had in the last 15 years. So we're just starting to see the economic reality of the situation. And until my premise is very, very simple. Until we see a decline in the cases that are coming out on a daily basis, like we've started to see out of China, and like quite frankly, we're starting to see out of Italy again. Italy had their second straight day of decline, so they're starting to decline a little bit. But until we start to see that in the U.S., the economic situation is going to be murky at best.
Mm-hmm. Noah, obviously a lot of this chatter is about the Senate and then passing this fiscal stimulus, $2.5 trillion. Obviously down here on the bottom, we've got this big 10% technical rally. Studying the history of bear markets, the biggest up days in the markets have been after huge sell-offs. Do you see this as the potential start of something more? I mean, is there a counterpoint to
I just see a short-term rally especially if they get, whatever they're calling it stimulus, but let's be honest, it's life support. Whatever, their bill is that they get passed, I see the market rallying for a day or two, but then beyond that, that's right. The PMI numbers are terrible. That we're going to see a significant hit to GDP. We're just heading into earnings season, which won't even show the effects of it, but we'll see lots and lots of companies pull their guidance and, those types of things. So I think that we're poised for a short-term rally. Especially if we do see them pass something, which I have my doubts, but I think that if they say they're close, hopefully they get something passed, and then the market will put in a short-term rally, and then we'll go from there. But great opportunity.
Making projections about where it could rally to, I think, is a fool's errand right now. Even if you do break above this little level here, Matt, and you rally into 2,700 or 3,000 or whatever it might be, I think that's a completely misleading part of analysis. I don't even know how you would start to map that out, Mark, on how much this bounce could happen if it continues,
Well, I would start by drawing Fibonacci's, Tim. Says that's what we did in the lounge this morning. So
Where would my fib bring me? All right. Listen, I mean,
hey, it would just give you a good wild guess. That was all you would get from it, is just a wild guess. Right there, it's going to go 50%, 2674, clearly.
No,
or the other ones.
And how I'm thinking about it, so let's say it rallies to 2674. Like, put yourself in the gamesman theory, because that's what you have to do in these situations. So it rallies to 2674. Do you really think with everything going on, it's then just going to rally to 3,000?
Nope.
Let's say it rallied to 3,000. You think it's going to rally to 3,400 to all-time highs? I mean, that's insanity. That's insanity. And so at some point, you don't know where, because Tim's right. It's a little bit of a fool's errand trying to guess that. At some point, short sellers come back in, people take short-term profits, the same rinse and repeat cycle, because in the midst of, France came out to say, and they said they're running at 25% of their GDP. Countries are shutting down the world. So no matter what the US does, to think that everything's back to normal and that rallies are sustainable to the top and you have a true short-term V-shaped rally in the midst of that, that is, I mean, I guess anything can happen. An asteroid can hit the Earth, right? Like anything can happen. But that seems like out of all of the scenarios in which this plays out, the least likely.
It seems almost impossible to me, Matt. I mean, having some V-shaped recovery where the market just goes back to business. And quite frankly, I think if there's one lesson in all of this is to look at the data, look at the information, and look at the actions, not necessarily the chatter. Because I'm hearing out of the administration right now that we're going to be back to business in a week, you know, and the stimulus yet is still trying to paint a picture where we're going to need economic relief for 3, 6 months, or even a year. So which one is it? Do we need economic relief for 6 months, or are we going to be back to business in a week or two? They don't match up to me in terms of what the government is even planning to do. So I'm even trying to map my head around what the economy looks like in 3 months. I mean, I'm seeing some pretty stark economic numbers, Matt. What about you?
We have not started to see the economic impact in the US. Remember, all of these situations happened in Asia and Europe before they happened here in the US. We've seen the economic reality in Europe, right? You're talking about major economic devastation across the board in Europe. There's a reason that European central banks and governments around Europe are doing historical fiscal policy and historical monetary policy the same way the United States is. But if the United States has an economic downturn to the degree that Europe has had, and to the degree that China has had, and to the degree that many countries around the world have, then you have to face the reality of the economic situation that's going to have a very damning impact on the economy. And Trump lifting stay-at-home orders or social distancing guidelines, that's not going to cure the problem. It just isn't. Europe's not going to open to business just because America sends their consumers to the labor market.
Mm-hmm.
China's not going to start just exporting all these goods. India just literally today shut down their entire country, 1.3 billion people, for 21 days. You guys realize one thing, that America open for business is meaning America open to the global economic system, not just the American economic system. We have not lived in isolationist economic system for 50 years now, probably even longer, since World War II. And so from a GDP perspective, when you're looking at what's happening in France and the European countries and the Asian countries, and you realize that 50% of the GDP of America comes from those countries, it's not going to cure the problem simply because you want to send your workers back to work.
Yeah. So even if the Senate does pass this bill, fiscal stimulus might create a short-term rally and all that kind of stuff. But the basic premise is we still don't know what that next wave of data needs.
Now think about this from a sentiment standpoint. All right, so the bill passes, it's out there. What do the markets have to focus on new news in the coming weeks, in the next month?
Coronavirus data, the actual healthcare data.
Economic data, which we saw in Europe, is terrible.
Earnings reports, which we know are going to be bad.
Or just a lack of news. A lack of news or things could shake the market could be a good thing.
So like, the Fed, they might have a few quivers left. But I mean, they've fired their bullets. This fiscal stimulus package is going to be the huge, mega, massive. It's very unlikely in the next 30 days that the government's going to launch another $1 trillion fiscal package.
Mm-hmm.
They might down the road, but not anytime soon.
I don't think they're done, Mark.
But like in the short term, the coming weeks, what is this news driving sentiment in the couple weeks? It's probably not going to be good, right?
Mm-hmm.
Maybe it is. Maybe you see, maybe it is, but like, from a probability standpoint, you're having to deal with that, coronavirus data. You're having to deal with economic data. You're having to deal with companies' earnings data. And
I understand that the number is a big number. $2.5 trillion is a really big number. But when you look at it in comparison to what they did in 2008, they did a $750 billion initial plan. And that was with the market going down, not the market, but the economy contracting about 2 to 3%. If the economy, and we're a much larger economy today than we were 12 years ago. And so if you're looking at 2.5 trillion versus where the economy is versus where the economy could contract down into, let's say we only contract 10, 12%, some of the positive type projections, right, from Bank of America. 2.5 trillion in that environment where we are from an economic is fairly similar to what they did in terms of percentage to GDP back in 2008. But let's say we're closer to the JP Morgan and Goldman Sachs projections of 24% decline. At that point, you're going to need $4 to $5 trillion to stimulate the market to the same degree that you did in 08. And again, I just want to remind everybody that after they did stimulate the market in 08, the market still had another leg down of 30%.
Yeah. Yeah. We're nowhere out.
This to me is just a numbers game. That's all it is. It's just a numbers game.
Well, and quite frankly, even this money, this slush fund or whatever you want to call it, that's going to be going to corporations, what it's used for. I mean, Mark, we've seen this in dark economic times. Companies still lay people off, and so even if they're required to maintain 90% of their active workforce, what are they doing with contractors? They're still going to be letting people off, don't you think? We're seeing unemployment in the double
When
digits.
we know what the final bill is when it passes both houses, we will have a lot more ability to give you good analysis on what things could play from a longer term point of view.
Exactly. I agree with that, Mark.
Like if we
especially what sectors are going to benefit, because some sectors are going to benefit much more than other sectors will. Simply because you get economic stimulus doesn't mean I want to go out there and buy energy companies right now. Right?
Yeah,
There's going to be certain sectors that people are going to start buying before other sectors.
Yeah. Bounce this out to a different time frame real quick, and I want to have a conversation just about what we do know about the coronavirus situation right now in the data. Mark, you've been studying a lot of this. I know you were gone yesterday for a family issue and whatnot, but you've been studying a lot of the data. What are we seeing in Italy right now? What are we seeing in the UK? I saw that the UK did ban meetings over 2 people. Then kind of work us through what you know about coronavirus and COVID-19 right now and the continued outbreak.
Well, we know that the more severe the efforts are to social distance, the better the numbers look. It's that simple. Italy has, I believe, if I saw the news headline, you can't go to the gas station right now. So along the way,
well, if you're not supposed to be traveling, why do you need gas?
Along the way, they've had to take more and more and more and more and more severe steps to mitigate the issue. Okay. So if numbers start getting better, there is a correlation, and we've seen that correlation between China, who went all extreme, total draconian, shut it all down, we'll deal with it all later, in which they fix the problem. The other way, the efficient testing thing that South Korea did, well, that boat has sailed a long time ago. South Korea's numbers, other Asian numbers on the coronavirus deal with a scientific healthcare community that was on top of from the start in combination with social distancing, but they just were better equipped, and hopefully for the next virus years down the road, other countries catch up to their techniques and what they did. But that ship sailed. So we have to look at things from an Italian model, from a Spain model, that the US and Great Britain are now attempting. We'll see if they actually attempt it. And the only way to slow down the virus, the only way to slow down those numbers are severe social distancing mitigation techniques. That's just what we're seeing. So if we don't do that in the United States, those numbers will climb. If we do that, at some point we will flatten the curve. And when that occurs is up to big debate. And currently, I guess the big question now is it worth it? Do we do that? I mean, that's what you're starting to hear chatter at from Trump and other politicians. Is it worth it to even do that?
Well, and a lot of people are complying with the stay-at-home order or even just self-quarantine on their own. I know that many of us here are, obviously. But I heard Governor Cuomo, who is the most affected state in the country, come out and talk about how so many people are not. I guess Central Park was full over the weekend, guys, because it was a beautiful day in New York. People are still going outside. They're still getting together. Here in Utah, Matt, we talked about it. There was a big gathering at the airport to welcome the missionaries home. So do these measures, are they even going to work if people don't comply with them, Mark?
When you put the military in the streets, they will.
But we're heading the I mean, I wish this wasn't such fascinating theater, because what is going to happen here? If you had the lieutenant governor from Texas come out and basically say, let's work, let's get back to work, let's deal with it, let's deal with the consequences. And you have certain governors like Cuomo who just came out in the last couple hours and said, listen, we are not going to sacrifice human lives for the economy. Do you see a divergence in how states handle this, where some states just say, nope, this is our approach. We are not going to shut down our state economy. We are going to go to work and we will deal with it. And if problems arise, you could see a huge divergence in how individual states handle this, no matter what the federal government says. The federal government can list their guidelines. That's all they are guidelines. But different states are going to react to this, I predict, in much different ways.
Based on the tone I'm hearing from Cuomo giving speeches and testimony, he's not opening back up for business anytime soon. In fact, I think they want to take more severe measures. Matt, could you be leading towards a state issue where, you know, California, which is the biggest tech center in the world, it stays shut down for 3 months, but yet Texas, which is the biggest oil producer in our country, opens back up? I mean, what would that even look like? I have no idea.
Well, I think that's kind of where Trump's leaning to in terms of the proposals of, you know, opening up the workforce again, is leaving it up to individual states to make those choices. And, you know, to me, I mean, there's only so much the federal government can do in terms of forcing states to do certain things, right? The federal government can't tell the state of California to open up business if the state of California, Gavin Newsom, doesn't make that decision. Gavin Newsom makes that decision. President Trump does. The only thing Trump can do is withhold federal funding from the state of California, which would be a disastrous political decision. So I don't see that happening, but I do see him, you know, coming out to individual states making choices. And at that point, you might have states actually say, okay, well, if Texas is going to remain open for business and California is going to take this healthcare situation with the absolute seriousness that it needs to, California might say, well, we're going to shut down our border. So to me, it's going to make the situation worse. I support social distancing guidelines. I support stay at home. I think that the best scenario here from an economic perspective, the best scenario here from a market perspective, in my opinion, is to fix the underlying problem. And opening up America back to business, in my opinion, does not fix the underlying problem. Now, let me paint a scenario very quickly. Let's say for the next 21 days, we have strict social distancing guidelines, stay-at-home orders, and just hypothetically, people actually do stay at home and treat social distancing with the respect it needs and it deserves. Well, let's say we fix that underlying problem, and thus at that point we send America back to work, and all of a sudden our labor market is opened up, European markets now open up, Asian markets now open up on the backs of historical fiscal and monetary stimulus, with the U.S. economy, starting to, bottom out. That's a scenario where you can actually get behind saying this market is going to recover. But simply issuing an order reducing social distancing guidelines in my opinion, does not cure the problem. In fact, I think it will lead to much, much, much bigger economic problems down the road.
Yeah. Now, Matt, I didn't even think about if certain states, because, I've modeled out, I'm like, all right, I can see certain states not doing this. I didn't even think about the California's telling Texas, nope, your citizens can't come here. Our borders are shut down.
State border closings, that's going to be panic. You're going to have people freaking out, especially in some of the states that the borders are gray lines, certain cities that reside in 2 different states at the same time, or even 3, some of them, like Texarkana and stuff. Like, that would be crazy if the states had to do that. Would they have to call in their own National Guard and then set up basically border patrol?
Well, without federal guidelines, the states are going to do whatever's best for the states.
In their opinion, whether it's best or not, right?
Yeah, whether it's best or not, but they're going to do whatever they feel is best or not. Again, I just maintain one thesis. You have to cure the underlying problem, which is obviously an economic problem, but it's also because of a massive health related situation. If you cure the health related situation and you remove that from the equation, all of a sudden you can see a path to massive, massive money coming into the market, where people are now going back to work. And obviously we're going to go into deficits to the tune of trillions and trillions of dollars. And that makes my conservative heart bleed a little bit. But at the end of the day, I don't make those decisions. We have to apply that. But if you do see $2.5 trillion in money coming into the market, with a large percentage of that coming into the consumers, you see $500 billion in bailout money for the cruise lines, the banks, the airlines, the Boeing, the industries that are really impacted by this. With what the Fed has done over the last 3 weeks, if you cure the underlying health problem, this economy will bottom out. And because all the money that we're putting into it, at that point, you will see a V-shaped recovery, in my opinion, but not until that point. If you send people back to work, you're going to see numbers go up in absolute, just very, very nerve-wracking and scary situations. And guys, if the numbers continue to go up, despite opening up America back to business, it simply does not mean consumers are now going to start spending their money and having the confidence to go out in society and, interact into the same capacity that they did before this situation. It doesn't cure the situation in Europe. It doesn't cure the situation in India. It doesn't cure the situation that's happening from around the world. You have to focus on curing the underlying problem that is causing all this economic pain.
Yeah.
Everything else is a Band-Aid, in my opinion.
Yeah.
So wait, is the underlying problem really the COVID-19, or is it more like the Fed?
Well,
don't get started on the Fed.
We might be looking at a decade of stagflation because of this action right now. So it will be the Fed eventually, Cody. But I think in the short term, it still is COVID.
I know. I'm just trying to make fun and make some light of the situation over here.
And by the way, there was a glimmer of hope out of Italy that the number of cases did slow for the first time, Mark, is what I read. I don't know how to take that, but we are seeing some anecdotal evidence out of some of these hard hit countries that things are slowing down. Do you take that as a positive, Mark?
As long as mitigation continues, mitigation works, right? The virus is not like we've said this many times, is not a mystical creature that can seep through your walls. As I'm sitting here, as long as I'm not touching with something with COVID-19 or someone exposed to it, I am not going to get it sitting here just magically. Yeah. Mitigation techniques works. The debate is, what does the economy, what do companies look like after that? But you can stop slow. We've seen this. We've seen this over and over and over again. So
I don't understand why we are discussing this so quickly. It's only been a week. It's only been a week.
Lost a lot of money in the stock.
Are you sure, Matt? It feels like 2.
It does. It feels a lot longer than that. Actually.
I actually saw that on Facebook. It feels
amazing how time has just slowed down in these environments, no doubt about that. But in my opinion, again, this is just my opinion on reading the tea leaves and my market experience and whatnot. But I just really do truly feel that if we put the economy on the back burner for 3 months, even if it's stay-at-home orders are only for 2 to 3 more weeks, but if we put the economy on the back burner for 3 months and we focus on curing the problem, this economy will get ready to boom again over the next 10 years. So let's risk the short term for a better long term, in my opinion.
Well, here's another problem to add to that. Let's say the U.S. does go through that and we put the economy on hold for 3 weeks or a month or something, right? And we start seeing sharp declines and decreasing of cases here. What happens when travel opens back up and we have seeding of the virus from other countries again?
You're going to see a second wave and a third wave of this thing, aren't you, Cody?
Oh, yeah.
Most likely in the fall.
But that's not the point of the stay-at-home orders and the social distancing. The whole idea is to let medical equipment start getting produced, let science get in front of this thing as much as they can and not overrun the hospital.
Yeah, we're trying to buy time.
We're trying to buy time.
We're trying to buy time to allow that line of flattening the curve. We're trying to be able to add that line to increase it.
And I think what you're bringing up,
an increase in numbers, we're going to have a decrease in deaths, and because the medical healthcare system is able
100%.
to take care of it more.
This is my biggest concern right now with this rush to reopen the economy and all that kind of stuff. If you just reopen it and then you see a second surge, which is bigger, and we do not contain it because you didn't take the extra month right now to buy that time, that seems very, very silly.
It seems short-sighted.
It does.
It
completely
seems short-sighted.
Pain on Wall Street. I get it. I know a lot of people are losing a lot of money, and the market is bouncing here today, 8% up on the S&P. Some of the biggest updates in the history of the market.
Can I ask you guys a question? Just in your opinion, I want to hear Cody, Noah, Tim, and Mark. If we do focus on buying time, like Cody says, for the healthcare system to get ready for a potential second wave in the fall, But if we start to see the numbers go down based on these, based on the Corona situation, aren't you guys a buyer at some point in the next few months if we really do focus on curing the underlying problem?
Absolutely. It's not today though. Absolutely.
No, I mean, day trading
there,
today, right? But
there will be a time to buy into this market.
Yes.
I don't know if it's here. I don't know if it's a 2000. I don't know if it's in 3 months. I don't know if it's in 6 months. I don't know if it's in a year.
I may or may not be speculating on banking stocks and bailout at the moment. I cannot confirm nor deny, but
Yeah.
short term, just short term, I think we may see a pop.
I know a lot of traders are nibbling right now, Matt. Not me. I'm still day trading. That's where I'm at. I need pivot relationships to stabilize. I need data out of COVID-19 to stabilize. I need something more clarity from what's happening from the healthcare response, and even the money for bailouts. Personally, I don't think it solves the economic issues, even mathematically, if you still have 15 to 20% unemployment for 6 months or a year. And companies historically don't go just rush back out and start hiring people they just fired. Even if you give them a bailout, Mark, there's still going to be a lot of unemployment. And if people are getting $2,500 or $3,000 a month in checks, I know a lot of pension holders who don't spend a lot of their money and they make $2,500 a month in pensions. These aren't high spenders in the economy. So yes, at some point, Matt, but for me personally, it's still quite a ways out.
And I am starting to nibble a little bit, just to be honest. I'm starting to nibble with naked puts, not buying shares outright. If the thing V-shaped recoveries and goes, and I'll just miss out on that, like I've said all along the way. I talked about that 50-cent credit you could get on MGM at $3, those type of things. Like, I am willing to nibble on naked puts in certain circumstances. Once again, a very, very small percentage of my overall portfolio. And I talked about my thesis in the mind of a trader on Sunday for pro members. If you want to go watch that on Sunday in more length, I think it was like 3 hours long. So, nibble a little bit in selected areas down below. Now, I'm not going to nibble. The higher price goes, the less likely I am to nibble, ironically, because I'm only interested in really good deals, really down below, where I'm willing to hold it for 10, 20 years. I mean, if this market rallies for 2 and 3 days, I'm not nibbling at all. I'll wait for the inevitable bear market rally to fail, come back to lower levels before doing that again. So ironically, the higher it goes right now, because of everything that's been said, the less likely I am to nibble, because you're going to see a reversal most likely at some point.
Well, I think the most important part of anything you can do right now, Matt, is build an investment thesis, whether somebody's deciding to nibble or not. I mean, there could be logic around it. I'm not going to say I have the ultimate say on what happens. None of us know the final answer to this, by the way. We're building a thesis. We're looking at data, and you got to stay data driven. There's no question about it. Take it on a day by day basis. I will tell you this, whether you're nibbling or not, Mark, I guarantee you're still looking at day trading opportunities, right?
That's still the primary thing you should be doing.
Still like the number one thing that is there.
Why would you, I mean, as your primary focus, because once again, when I'm talking nibbling, I'm talking 1% of your portfolio on a naked put way the hell down there. 2% of your portfolio spread out in 2 different industries way the heck down there. I mean, it's a nibble in the truest sense of the word. But once again, on these rallies, but once again, like, why would you go against the primary thing that's been worked again today, like finding ways to get into the momentum of the market, finding those patterns, those signals, whatever, getting into the momentum of the market. That's what has worked for 5 weeks. And so as far as primary learning, that should be where your focus is still today.
Market's giving back about 2% in the last 15 minutes here.
Yeah, 2% is an intraday pullback. But isn't one of the number one and most important vital rules in trading is always trade in the direction of the overriding trend?
Yeah.
Is anybody going to call this one up? Or is anybody here going to call this one uptick in a bear market like trend reversal?
Nobody's going to call it that.
Nobody.
No one would tackle trading. I'll tell you that.
Okay,
much.
then I get it. Everybody wants to try to find the bottom. Okay. But you don't need to find the bottom. Let the bottom find itself. Focus on the underlying problem. And then there's going to be massive, massive money to be made when this market truly does recover.
I love that phrase right there. In fact, Team Tackle, somebody put that in the chat for me. Let the bottom find itself. You know, that's pivot relationships, data, that's time coming in, things settling itself out. There's a reason why we look for double bottoms and we look for volume to come in. By the way, the volume today is very light. If you look at it, Noah, is that a concern at all? I mean, I'm looking at a huge rally and not a lot of volume coming in.
Yeah, no, I mean, definitely, we're at the midday session, so it's certainly, not uncommon for it to be lower this early in the session, but it is not high volume on the rally. So and again, any rally we get out of this, I think is going to be short term at best, but I wouldn't be surprised if you saw a knee jerk reaction to it and shorts being forced to cover, like, trying to keep their face from getting ripped off. If it does rally, you'll see bears buying to cover a bit, but that's about the extent of it.
I wouldn't be shocked to see a traditional bearish retracement here.
Oh yeah. Like, in fact, that's kind of the idea is the only thing I'm looking at is short-term rally, and it's a relief rally. That's all it is. And then, again, it'll play out as we all suspect. We're not quite there yet. So
lots going on in the markets here.
If we were to have a developed vaccine that actually makes it through phase 4 trials and goes into mass production, do you think that would assuage you guys to think that it might be shape?
I think any focus on curing the underlying problem that is my thesis. That's my buying thesis. If we focus on curing the underlying problem, including, the vaccines and all that jazz coming down the road, we see a reduction in the cases like we've started to see in Italy and what we've seen in South Korea and what we've seen in China, on the backs of historical stimulus coming out of the Fed and the United States Congress. Yeah, I think that's the buying opportunity.
Yeah,
I want to be very blunt. I got to answer Cody's question here because I'm going to be very blunt for 1 second. As long as it's actually scientifically backed and it does get through trials, Cody, there's been so much premature eternal optimism around some people who just want this to go away. They're trying to find anything to hang their hat on positively, and I get it. That they've been, pumping up all of these different things like vaccines are getting released here and this drug has some kind of response there. And we have not had that scientifically proven. In fact, a guy in Arizona took some drug that was not approved that was supposedly going to be helpful to his COVID-19.
Well, there's always going to be the snake oils out there. I mean, like a legitimate, like there's something like 5 or 6 in multiple different countries that are already, going through phase 1 where they're in human trials.
Let me be even more blunt, Tim. Do not take your advice on how to medically treat yourself in this situation from the same people who 10 days ago saying it was just the flu and a media overhype.
I would say don't take anything that the doctor didn't prescribe you other than vitamins.
Yeah.
Do not buy some off-label drug on the street from
and on Matt's thesis and in the mind of the trader I did on value investing in the first 20-30 minutes, I laid out that conservative thesis. For the conservative thesis buying opportunity, it was just what Matt said. These are the things we're looking for. These are the situations to look for those conservative investors that just want the really good opportunity to come in. It lays that out. It was everything that Matt just said.
I want to see it. And Gilead, by the way, is working on some kind of vaccine right now, Cody. They're actually rushing it through, and hopefully that can actually happen. We would all love to see a great medical response to this. And that's the whole point of the distancing, is to get medicine a chance to get in front of this and get some good work done. And we're seeing some good response out of some companies. Let's move on through the markets here, guys.
The wealth will come back into America over time. It's going to happen.
The U.S. dollar is showing that people think it's going to come back into the U.S. faster than other nations as well. I think as a global whole, people are betting on the U.S. recovering faster than other places. The U.S. economy.
Mm-hmm.
I think over the longest stage, you always bet on the U.S. long term.
Yeah, there's a sleeping giant of the U.S. economy that is waking up to fight this thing.
Oh, the discussion of whether we invest in the U.S. when it's time or Europe, I think it's a pretty obvious answer.
It's U.S.
Right? Yeah, for sure. All right, guys, let's move through the markets here real quick. There are a bunch of companies I want to talk about. I also want to talk about oil first off, though. There was some chatter. I thought it was one of the funniest headlines ever, Matt, that there was a hint at a U.S.-Saudi deal. And Matt, we actually went and looked at the actual information in the quote, and there wasn't anything even discussed.
It was so funny. Headline reads, oil surges on hopes of a U.S. Saudi Arabia deal. And then I read the article and it's like, there's been zero discussions between the US and Saudi Arabia. And it's just like, oh, wow, we're just making stuff up now. No, crude here is still under pressure. To me, I maintain that, 20 certainly could hold, but we're going to have to see some positive news coming out of Saudi Arabia and Russia and the US regarding that. I still think oil's under some pretty significant pressure here, though.
Tell me why I shouldn't sell a $3 put on USO. Convince me out of it.
What does 3 correlate with the price of oil here?
So it'd be about a 40% more decline.
So 3 is 18 or $1.80 down from where USO is right now. Crude, and so 40% down on what strike would that put you on crude light, Mark? 15 bucks?
Yeah, maybe 12 bucks on crude light.
If your investment thesis is that you're willing to hold that for years and cash flow on it, I can't tell you there's a reason not to. If it's because you think oil is going to find a short-term bottom, and
everything I do right now is 10-year hold, willing to, like, this would be the first leg of adding cost averaging down as if oil even went down lower. So
over 5 or 10 years, oil cost averaged around $10 to $15, I think would be a good investment personally. This is a decade long.
It seems like a good bet, just like a good bet, like getting into a USO at 280 as a bet, because once again, that's going to represent a very small percentage of most people's portfolio. Convince me why I shouldn't.
Maybe here's probably the simplest argument.
Here's the argument against it. Crude could go down to 15 and USO could go down to 1.
So
USO is not 100% correlated with crude oil. But if the hold is 10 years, if that's the investment thesis, 10-year hold, I got no issue with people trying to dollar cost average. I don't buy the premise that oil is going to go negative here. I think that's insane.
No, it's not. They'll radically do things to cut.
Yeah, I think that's insane. And if oil ever gets down to $10, I think Saudi Arabia would actually start coming to the table here. I don't have an issue with people starting to nibble in the oil market if their investment thesis is I'm willing to take a 20 to 40% downward risk for the next, hypothetically 200% gain over the next 10 years.
Mm-hmm.
I have no issue with that. I think it's fine.
No naked puts on oil. Can I sign you up?
I'm not opposed to the idea, but Mark, you might want to save your money just in case McDonald's brings their McRib back out, to help stimulate their recovery. So other than that, I think it's a pretty reasonable idea.
I am not trusting 18-year-olds. Listen, this is how bad I think the COVID-19 is.
You would not go get a McRib if they offered it today.
I don't trust 18-year-olds. No, they're not even 18. They're 16-year-olds. What I've seen out of some of these younger people and their flippant attitude towards it all, there is no way I would trust a 16, 17, 18-year-old worker giving me anything right now. Their generation seems to have a generally flippant attitude towards it all.
I went to the grocery store last week, Mark, and I went to take some wipes and disinfect the grocery cart before I push it around. And some 18-year-old girl is there. She says, "It's clean." And I'm like, "Well, thank you. I'm still going to double clean it."
Now I'm sure it's clean because I just cleaned it.
That's right.
I still think the trade is on the short side of oil. I still think
point of view, yeah, sure.
Right.
There's the argument, Mark. You'll get more money next week on the same naked put at a better price
at $2 instead of $3. But no, I understand because when Mark's saying he's looking at selling a $3 put, he's looking at putting 2% on that, right, Mark?
I want 10% of my portfolio in oil eventually.
So the initial
oil at like $10.
Let me ask a question. So Mark, you're completely out of oil right now, correct?
Yes, 100% out of oil.
Okay. And so you're looking at
this $3 put.
Okay, you're looking at this over the next year of building a 10% position size that you're going to hold for the next 10 years, correct?
Correct. And eventually, long before 10 years, I might slowly get out of it and take profits as it goes up.
Well, most of the time, Mark's not even going to, the naked put's not even going to get put to him. So he's just going to cash flow on the instrument as he starts to build that position. Maybe 4 out of the next 12 months, Mark, you get it put to you. You start accumulating shares that you're going to hold for the long term. But I would just start that with very, very small position sizes.
Once again,
I know
nibble.
you are.
Nibble.
Yeah. I don't have, again, I think the trade, I think the trade is under $20. That's where I think the trade is on the short side of oil. But for somebody who's going to build a position by scaling in through naked puts and very conservative deltas at very low prices, I have no issue with that. I think it's a wise strategy.
Done. I'm going to do it today. I'm going to start my oil position.
Well,
now watch it get put to him in 3 days from now.
Well, I mean, but once again, okay. I don't mind that because and this is the long-term value bottom feeder investors mentality. If I've already accepted that 300 is spent for a long period of time, it no longer exists. And so if it came down quickly, I could start selling $1 puts.
Here's also something to consider. If oil goes down to 15 and maybe even $10 to $12, which I'm not ready to project. I do think 15 is in the ballpark. But at that point, you're talking about USO being at $3. And at some point, you're going to have discussions of USO, that ETF, doing a reverse split too.
Possibly. Yeah, they do that.
No, if they go down that low, they'll reverse split 10 to 1 and build their price back up.
They tend to always do that. Yeah.
UNG did it years ago.
You know what I like about this, Mark? I'm not going to make that trade. I think it's too early for it, but you are the type of investor that always
Mark's a bottom feeder.
Well, and
I'm
here's
a bottom feeder. I am a proud bottom feeder.
Yeah.
He's like a catfish.
Get that on
Twitter.
An
unapologetic bottom
feeder. Get that
feeder.
on Twitter. I'm a proud bottom feeder. I like that. Mark's image up there. There's no doubt about it. But I think there's a lesson out there for our team is that you need to build an investment thesis and a personality on how you approach the markets, Matt. Be data-driven. Think out.
You have a plan. You execute your plan. You don't chase dreams on a daily basis.
Yeah. Speaking of which, the plan on gold for you, Matt, has been pretty clearly stated. Gold is now having a huge day here, up 5.7%. What's your read on the metal right now?
My read on it, it does not matter. It does not matter. Technically, I don't care what happens. I don't care if gold goes down. You should buy more of it. Guys, we're talking about unprecedented amounts of money coming into this system. We're talking about unprecedented amounts. What's the U.S. deficit going to be this year, guys? 3 trillion?
Gazillion.
It's going to be impressive.
I mean, we're talking a national debt into the 25 trillion level.
I love, what's funny? We used to call it QE infinity as a joke. They are now literally calling it QE infinite.
That's so funny. It's true.
We used to say that as a joke.
What you are seeing is honestly astonishing and amazing from a monetary policy perspective. You're going to see, in my opinion, based on everything that the Fed and the government is doing, based on everything we're doing with debt, you're going to see gold skyrocket. And you're not going to want to pick the day it skyrockets. You're not going to be in front of the market at that point.
I hope
there's going to be days in gold over the next year, guys, where you see gold go up 100 points. That's what it's doing today.
Yeah.
It's up 93 points. And you're not going to be in front of the market to capture that.
Whatever you put in savings, just buy it on a monthly or weekly basis in gold. You'll end up cost averaging and you'll help you in the long term.
Guys, you can't buy physical silver right now.
I was just going to bring that up.
Nope,
you can't even buy it. All the dealers are out of business right now because of the demand in physical metals has been so high. But it's not just the fact that you're paying like a massive markup in price when they do have them available. Spot price silver right now is going for what? It's going for $14.25. You can't buy a coin under $22. Okay, that is massive demand coming into these markets. Massive demand, and that's not going to change. So gold's going to go up and down, and gold's going to have some big down days too. No doubt about that. Don't overanalyze it. I love what Mark said about oil. His investment thesis in oil is he's willing to take short-term risk because he's going to build a position he believes in over the next 10 years. Treat gold the same way. Your holding time period is very, very important. For gold, your holding period should be literally forever.
Yeah,
we are fully embracing modern monetary theory.
Oh, they're all
100%. Guys, corporate socialism, social welfare programs, we are embracing modern monetary theory, right? Where they're not going to give people a little bit of money just in a month. They're going to give people money over time. You're going to want to have gold in your portfolio as a hedge against currency and economic calamity.
Mm-hmm.
No, and I hope individuals, because looking back over our last 3 weeks of analysis on gold, it was spot on. And a large percentage of pro members of Tackle Trading have a significant portion of their holding in gold, because we've been pounding the table for 14 months. And our call the last 3 months is this is margin calls, this is forced selling, this is not fundamentals. The fundamentals are stronger than ever. And that has been what we have been saying very clearly across the board for 3 weeks, every single one of us. And I just hope people didn't get spooked along the way.
Yeah. Gold's having a huge day today, almost 100 points like you talked about, Matt, and that's not going to be uncommon in market conditions like this moving forward.
No stop loss on gold.
I think it's an investment.
No stop loss on gold.
Right.
Yeah. Am I going to have a stop loss on that sold put on that? Am I going to have a stop loss on the MGM shares if I acquired them at $3? No. It's not a trade.
It's an investment.
Dollar down here today, and just the volatility it's had. It's just a little hesitation. Actually, a bull flag up here on the dollar.
I was going to say that's a bullish retracement.
Bull retracement, bull flag.
Wait for it to trigger. Keep going to the upside. Yeah.
Even with all this fiscal stimulus, Matt, all this monetary policy creation, going into 25 trillion in debt and all that kind of stuff. Look at the data in Europe today, and it's a reminder as to why the dollar still is stronger than the euro right now. If you ask me to own one currency, I'm still owning the dollar. Does anybody disagree with that?
Nope.
Okay.
It hurts my heart whenever I have to short
the only currency
the
of truly of any significance is gold, but out of paper currencies,
yeah.
I don't know. You could own the people's currency, Bitcoin. It's up 2% today.
Not the people's currency.
That short-term trend in Italy that people were saying.
Bitcoin moves with the market. It's an aggressive. It's an aggressive asset class. But before you get into your little, point at the scoreboard on Bitcoin for one day, pathetic, by the way.
Oh, it's bear retracement.
Before we do that, very quickly, you are clearly establishing this 101 level on the dollar index. You also have that overhead at 103. So you got this fairly, it's not a tight range on a currency. When you're talking about an intraday range of $2 on a currency, that's actually a fairly significant range, very similar to what's going on in the market here. But you are seeing these levels of support and resistance that you could look at potential K trades here underneath 101 or above 103. When you're looking at it on the only currency that anybody really kind of should be looking at it here, you're starting to see that the euro dollar show a little bit of weakness in its intraday trend that's been fairly consistent. You see a little double top scenario with the head and shoulders on the intraday, and now you're clinging to that support level right there at about 107.70. So if the dollar does, if the euro kind of breaks down here, obviously the dollar index is going to hold that 101 level. And then again, looking at that trade being the trade to me isn't a trigger on the euro dollar cross. The trade is a trigger above 103 on the dollar index.
Yeah.
News on the coronavirus has broke over the last little bit. And this is the one thing, don't day trade coronavirus news. Italy, which people, even at the start of the show, people were pointing, hey, it's getting a little better in Italy. Italy's deaths just spiked again, 750 over the last 24 hours. Do not day trade. Don't do investing decisions day trading coronavirus news. The coronavirus is a very serious virus. Even in these widespread mitigation attempts in Italy, you had another jump. Almost 7,000 people have died. The World Health Organization just came out and said the U.S. has the potential to be the next epicenter for the coronavirus pandemic.
Well, just like what's happening in New York.
Yeah.
So, if you day trade coronavirus news from an investment, this is the time to get on, you are literally being you're suspending logical brain function. When
you day trade technical conditions.
Because you to say, well, it's getting better in Italy, the worst. It's come on, and you're going to see some nasty things in the United States. You're going to see some nasty things where those headlines are there. When the stimulus bill is packaged and everyone says, "Good job," we are left with coronavirus headlines.
with what is happening around the world, with how China has approached this, South Korea has approached this, Japan, Thailand, Singapore, Malaysia, India, the entire Eurozone, Russia, many African countries now, with every country around the world literally shutting down their borders and issuing stay-at-home orders for 14 to 21 days. If the US comes out and says, hold my beer, watch this, we're going to open everything back up prematurely, you don't think the rest of the world's going to have something to say about that?
Of course they are. Even, obviously ongoing discussions between countries, but even here in the States, like we talked about between states, this is nowhere near done. We'll see if they can get the stimulus thing moving forward here today. I don't know when they're calling for that vote, by the way. But that Italy situation as well, Mark, I heard an Italian doctor say there's probably 10 times more cases than what have been confirmed. So whatever that number is, multiply it by 10. Now that does actually help people to think about the potential fatality rate, because death is a death, to call it bluntly. And maybe that's less than 1% or around that 1% mark. It's just way too early to be trading on that COVID-19 news. I'm with Mark 100%.
Well, I think even after this all, it starts coming down, when we get the antibody testing out is when we'll really know and be able to see, okay, how many people had it? Because you may be asymptomatic, 6 months from now, and they take the test, they're like, okay, you have the antibodies for COVID. And that doesn't mean you necessarily have it then, but it could be a historical account that you had it.
Yeah.
And I think when those numbers come out is when we're really going to understand, how big this thing was or is currently.
Sure. Some companies I want to talk about here, Matt, but while we got probably about 10 minutes here left in the show. We've had a great conversation. By the way, if you're watching our show right now and you've enjoyed it, give me a quick thumbs up. If you are new to our channel, as always, subscribe and click the bell. Make sure you come back and join us each and every day. Matt, there's many stocks on my mind here today. One of them is Chevron. Chevron, they cut 20% of their spending, but they also decided that they're going to suspend their buyback, but keep their dividend. The market is, applauding this. What was your reaction to that news out of Chevron? Good for investors? Do you think it was the right move by the company?
In terms of what was it? They're reducing spending by about $4 billion.
Mm-hmm.
Yeah. You're going to see this out of more energy companies, as what we've seen in just crude oil over the course of the last 2 months, and what we've seen in the the oil war that's been conducted over the last couple of weeks. But guys, this sector had massive problems before any of this happened. This sector's been in some degree a bearish market for a year and a half, 2 years now, right? As we rank every one of these sectors on a weekly basis, at what point has the energy sector not been the worst ranked sector at Tackle Trading? I can't remember.
No, it's been down there for a long time. In fact, it's probably been at least a year and a half, I'm guessing.
Okay.
Yeah.
So obviously what Chevron's doing is probably needed from a company perspective. They're obviously not making as much money in terms of, oil and production, and the drillers have been under pressure. And, Chevron up 17% on the news, but that doesn't change the fact that this is still a downtrend.
Sure. Yep.
These upward days in the market are so overhyped based on, it's up 17%. But when you're down 65% and you're up 17%, if you're down 65%, you need to go up like 115% just to make back the loss, right? Mm-hmm. So it's 17% upward movement in price. I mean, it's an impressive number, no doubt. But what happened? It came in, it kissed the 9, and it showed a little bit of weakness on the intraday. It doesn't get me to want to invest in Chevron as much.
Well, and you're getting some extraordinary moves, Matt. Just flash fire through a couple of these same kind of similar situations, stocks that were beaten up. Look at Royal Caribbean. Royal Caribbean, if you get the headline today, it's up 20% here, Mark. But that is an ugly, ripping doji candle. Noah sitting on the 9 moving average. Yeah, 20% up after the market has taken 80% of its value over the last 2 months. Is anybody buying Royal Caribbean down here?
No, listen, and Sunday, and this is one of the main points of the investing thesis I have right now on these distressed companies, selling the rips, because once again, what's Royal Caribbean going to do? Go to 50, go to 60, go to 70? That's insane.
Mm-hmm.
On these distressed companies, and I talked about this in length in the Record of Mind of a Trader that pro members can access. If you're a distressed company, I have a great faith that the government will spend as much money to keep companies alive. But being alive does not mean that they thrive. And so price on a 20% move, to me, this would be the last time in the world I would look to send a naked put. The closer you get to zero, the lower you go, the more interest I have, because I think the government will print enough money to keep companies alive. But that does not mean that they thrive and make money, and their numbers aren't abysmally record level horrible. You know, like
Royal Caribbean is not even an American company. They're incorporated in a foreign country to high taxes.
which is one reason that the cruise lines, even in the distressed companies,
all of the cruise lines, mind you, including Disney's.
I know, which is why the cruise lines, even under this thesis, are a no-go, because at some point that gets out and people say, wait a second, we're going to give these people money and they don't even pay taxes.
Not
and
only
so
that,
that
Mark,
lifeline might get cut off.
you told me in the recent Princess cruise that was very famous for, you know, the outbreak that it had, that the virus lived on surfaces for 17 days after people
I'm trying to
evacuated the cruise.
substantiate those things because we're learning so much about the virus. But I saw Bloomberg quoted some research that the length in which the coronavirus can live on surfaces might be a lot longer than we think.
Mm-hmm.
Hey, let me ask the community very quickly. Team Tackle, is anybody here planning, given the current health situation with the corona scare, is anybody planning to take a family vacation on a cruise line at any point in the near future?
Well,
No.
that just depends on how deep the discount and what they are offering on the buffet.
I was just about to say, I actually just posted something on Twitter. It was like cruise line crippled from coronavirus, and then it's like 7-day cruise, $40. Like, oh,
okay, so
oh, really?
Well, it's like 7 days, $40. Like,
okay, all joking aside.
Okay, yeah, all joking aside.
If nobody is planning on taking a cruise, it doesn't matter who gets bailed out because their revenues will still go down in the future, correct?
Yes.
And price is a direct reflection of revenue, correct?
It's over the long term, 100% of the
time. Over the long term. So even if these companies get bailed out, say the airlines, say the cruise industry, say Boeing, even if they get bailed out, aren't they going to still have massive layoffs due to loss of revenue over time?
Yes.
Okay. So there are going to be certain areas of the market that recover a lot faster, but that recovery is going to, long-term recovery is going to be because their businesses are viable again, correct?
Yes.
Okay.
Cruise line
so
is not going to recover.
Somebody paint me the fundamental argument for the cruise line industry or the airline industry, even in the face of bailouts.
All right, I got one. I got a fundamental argument. The zombie millennials are, not going to, pay attention to any of the information.
The zombie millennials don't have money.
Hey,
Yeah.
one of the toilet lickers has tested positive with coronavirus.
One of the
toilet lickers.
I saw that.
Has tested positive and is in the hospital. And yeah.
So does that mean they failed that challenge?
Or did they win? I'm not sure. Who knows?
Oh, I've got to look this up now.
There's going to be a lot of opinions out there as this bailout money comes out saying, oh, this industry is going to get this much money. This industry is going to get that much money. This company is going to get this bailout and that company is going to get that bailout. And CNBC is going to be like, buy air. And Larry Kudlow's going to be like, buy, because that's what they've said throughout this entire situation for 2 consecutive months. But it doesn't change the fact that companies getting bailed out are getting bailed out for a reason, and it's because of how they have mismanaged their company for the last 5 to 10 years.
Well, look at UAL.
That's not going to change.
Move on from the cruise lines to the airlines. I mean, it's the same basic discussion, isn't it, guys? I saw airline demand was down 80%. In Matt Airlines, you were telling me they're thinking about grounding themselves, saying, listen, we're not going to keep operating. We're losing way too much money. UAL's up like 15, 20% today. Yeah, sure. All the airlines out of stimulus packages and this idea of relief. But I think businesses are going to change the way they do business, and whether we want to or not, quite frankly. How many business trips are you taking to Europe in the next 2 years? Even if you're a company that does business there, you're probably going to do as much online as you can.
Tim, Tim, the historical Fed action from yesterday lasted 30 minutes in the market. I'm not ready to call a bottom based on 1 day of price action.
Yep.
I think that's foolish.
No, absolutely not. But I do think that a lot of companies are going to start looking at rediversifying, where their industries are, where their factories are, how they do business. So that I do think we're going to see a shift in, maybe a little bit more online, maybe a little bit more diversification of where these factories and industries are, different guidelines amongst countries and, and how things need to be done and where they're done.
Jimbo.
By the way, one of the biggest gainers of large cap companies today, look at Zoom.
Well, that's fake Zoom.
That's fake Zoom.
Yeah, I
Hey,
know.
it reached $60.
I just always bring it up just because it's so cute.
Somebody
So
tick 60, Mark. Somebody
tick 60.
Somebody tick 60. They're not happy. Zoom obviously has been exploding recently. Obviously, it'll pull back here today as you've got this shift back into relief efforts in companies, but I still like this company.
Well,
obviously.
if all of us could have been in that Senate committee back in January, we could all made these amazing changes to our portfolios before the situation became public.
Hey, give me the option chain on Zoom.
Again, Matt's trying to talk me into running for office. I'll see it.
There you go, buddy.
So because I'm always going to enter through naked puts unless there's a really beautiful technical setup where I believe that it's about to skyrocket out of nowhere.
Mm-hmm.
So looking at some of those cheaper puts, I mean, it's hard to argue.
105 put. 105 put.
I went
245, Chucky, for 1,000 in credit. If you're willing to own Zoom,
25% return on investment.
Right
if you're
there.
willing to own Zoom at $105.
I went to pick up my daughter from my wife. So I was coming back from the family thing I had yesterday, and picked up my wife, my ex-wife, I should say, works at a place that makes these long arm quilting machines.
Mm-hmm.
And so it was about 3:30 in the afternoon, and I picked her up, and this quilting company was having their executive team meeting on Zoom. And multiply that by the entire country right now. Like, Zoom will be part of companies' package plans. Are they going to cut Zoom in 3 months? Are they going to cut Zoom in 6 months? It's a negligible cost for these big businesses, relatively to speak. As companies realize how much money they can save, listen, not a good time to be in commercial real estate, in my opinion, right? As companies realize, oh my gosh, we can have people work from home and save, and they start doing those, you could see a societal shift towards working from home on a scale that is unprecedented. I don't think that's a bold call at all.
And Mark, I think there's going to be fundamental changes to see how we do business in America based on this. We don't know what those changes are going to be. We're going to see them in the real time.
And Zoom is positioned to be the leader in this area. And so once again, I'm the type that's always going to, cost basis is most important to me. And so selling those naked puts at lower levels, if I'll miss out on the skyrocketing, because that's how I approach everything each and every time, with an exception here or there, but they're very, very rare. And so looking to get into Zoom in the midst of all this, hey, let me guess a bottom. Let me see, where that bottom might be. Well, Zoom, no matter what, almost no matter what, through short term, but also a long-term shift in how companies do business. Once they get familiar, once they get integrated, it's like us. Once we're now familiar with Zoom, Zoom would have to screw up royally for us not to ever use Zoom again. We're doing this thing on Zoom right now. So, I think there is something in Zoom that should be prioritized in investors' mind right now.
Yeah.
I because I don't see how it loses out in any scenario.
Sure.
Unless you have company mismanagement.
Well, and I think this comes back to the idea of building watch list and themes and a trading plan around exactly what it is that you are going to be doing moving forward. Companies that you want to identify as buying opportunities, companies that have, models or a solution to the problem that you believe in. I mean, that's the coronavirus watch list. Noah, you started 2 weeks ago in the stock report that I extended on a little bit this week as well. There are a lot of sell the rip candidates as well. There's so many great ideas out there, guys. And the best thing I can just tell you is just keep showing up every day. Do the best you can to map out a theme and a thesis that you can feel comfortable with. Build your skills in your own trading so you know how to execute it, and go out there and do some good. Be data driven, Matt. Keep the emotions out and start building plans. There's no question about it. Guys, let's wrap this one here for today. Great show, as we always have. I enjoyed this one quite a bit. Matt, we had a podcast drop yesterday. We got a coach's show tonight. Kind of talk about those two things just a little bit if you can.
Yeah, we dropped the podcast this morning. Did an interview last week with Keith, and then we recorded a new market skyline as well, just kind of breaking down all the news, the way Trading Justice likes to break it down. And if you're new to us at Trading Justice and you like what you hear on the podcast, the way to support the podcast is always 5-star reviews on iTunes. That helps us get the good message of Trading Justice out there a little bit more. Also, if you are not a pro member of Tackle Training, you can click on the banner and get a 15-day free trial over there on the podcast as well. Tonight, we have at Tackle Trading. Tonight we have the third edition of Keith King teaching the futures market. And so for those of you that want to listen to Keith King and have been listening to Keith King over the last couple of weeks, obviously you can access the show for pro members right here under the Coaches Show, or on our calendar. I believe you can access the link on our calendar as well. And Keith is going to be discussing using futures as a hedging vehicle. The first week we did it as an introduction into the futures market. The second week Keith talked about day trading in the futures market. Today we're going to be talking about using the futures market as a hedging vehicle. And it's always good to get the Godfather's knowledge as much as we can. And so very appreciative of Keith for spending the time he has with the community over the last couple of weeks. And then next week, we are going to be doing options on futures. And I'm going to bring in the great Gino Porin along with Keith King on that because Keith doesn't do a lot of options on futures. Gino lives in options on futures. So got a nice little schedule of the coaches shows. And if you haven't listened or watched the coaches shows from the past couple of weeks, obviously you can always access there on the coaches shows main page as well.
Yeah, and if you click that, Matt, the last two links are there. Ben, I see Jay and Border, who's been Tran up in Seattle. Yeah, we always post the videos and recordings. If you ever need help finding something, just buzz us and email team@tackletrading.com. Guys, we'll be back tomorrow. Great job today, everybody. Have a wonderful day, and we'll see you back here on Wednesday at the same time.